family mode.
Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street and the small business lenders who help it grow. Lance Sexton, good to see you. Like the shirt. Kyle Gustafson, National Client Manager, Partner Science and Engineering. Kyle, so good to see you again. It's been way too long. And Partner Engineering, what do you guys do?
So Partner Engineering and Sciences is a national engineering and science company, obviously. But we help out a lot with the SBA community in environmental services, environmental due diligence. We also do construction risk management, so fund control, helping banks with construction loans, and a variety of other services that would take up the whole show if I talked through it.
No, you're not going to do that here, but you're going to do it October 11th. You're hosting a webinar.
Correct.
And first of all, well, tell me a little bit about the webinar, but what in the new SOP affects your space?
So specifically around construction, a lot of the key provisions in the SOP from 6 to 7 were removed. And so this has caused a lot of confusion with lenders throughout the country, especially around bond waivers. And so before you could get a waiver for a bond, and so those are very expensive, cost prohibitive for a lot of small businesses. Now you have to apply for a waiver. So most lenders do like to use construction risk mitigation companies like Partner or other ones that are out there. And so there's been a little confusion around how do we get that done and how are we able to do it?
Does the new SOP require a constructions fund component, Lance?
Well, the new SOP did something. I've talked about this for a while. The new SOP is not as much about what's in it, but what got left out. Right. And the construction section of the SOP, basically, it looks like somebody, did a copy, paste, delete on construction management. I don't know if Kyle agrees with that, but my take on construction SBA loans is follow what the 50-10-6 says and some of the new tidbits that Kyle can share with you. But if I'm doing a construction loan in 2023, I'm going to do it just like I would have done it in 2022. And Partner does a fantastic job of helping monitor funding on a construction loan, and that's one of the places where an SBA lender can get in trouble on construction loans. So I highly recommend that you consider Partner or the others who might do construction monitoring for an SBA lender.
Well, Lance and Kyle, though, if it's not in the SOP, so that means we don't have to do it, right, Lance?
It does not. It's, we've talked about this over the years. The SOPs are minimums and maximums, but they're not necessarily have-tos. And one of the biggest rules that permeates the SOP 50-10-7 is that do what you do rule, meaning prudent lending. And prudent lending means you're going to monitor a construction loan the same way you would a similar size non-SBA loan, which probably entails some sort of construction monitoring.
Kyle, give me a 101. How's that work?
Yeah, so Lance, well said. And basically, when you say one-on-one, what exactly do you want?
A 101. Assume that there's someone on the call who's never had a loan where we've had to have a monitoring aspect. Tell us what you do from the beginning.
Yeah, so before the loan even starts, we do a lot of due diligence on the contractor. And so we underwrite the contractor, make sure that they're qualified to do this. There's some other aspects of the SOP changes that talk about do-it-yourself. That was removed. Those are pretty risky loans, but let's skip that for now. So basically, right off the beginning, we're gonna look at that contractor, review their financials, make sure they don't have any negative aspects to working with them, have good references, and aren't overbooked. Secondly, we're going to look into that project. We're going to do what's called an initial project review. We're going to go in and look at all the plans and specs, make sure the budget balances with the, for the bank, for the use of proceeds and the plans and specs and the budget all say the same things. You'd be surprised at how often they vary. Once we get through that phase, then we're going to manage those draws. So the difference between a performance bond and construction risk mitigation services, we go out every month. We do inspections. We look at the draw requests. We go look at the work in place, and then we make recommendations of what to fund. A performance bond really only reacts when there's liens filed. And so, unfortunately, the problem's already started a long time ago. You're just becoming aware of it after the fact. And so the nice part about using a construction funds company is we can get out there, meet with the borrowers, meet with the bank, meet with the contractor, most importantly, and really document the work in place as we go through the process.
Lance, this is just wonderful. A project, ground up construction, is great with the SBA guarantee because there's two problems lending to this. A, you have no collateral, and B, you're not dependent on the borrower to perform. You're dependent, as Kyle said, on the contractor, which raises the risk of these projects dramatically. But they can be risk mitigated, correct, Lance?
Oh, I think that construction lending and SBA is a great opportunity. But there's nothing worse, guys. Before I became even while I was an SBA lender, I did a ton of single family home construction lending to developers. And I can only tell you the worst thing that can happen to you is a construction project that does not get completed. And even though I did my best to go out and monitor, you need a qualified set of eyes to look at a construction project to make a determination if it's supposed to, based on the draws, to be 60% complete. Is it 60% complete? Is there enough money still available to complete the project? So I love the idea of using third parties to help monitor the construction, like Kyle's company, just to make sure. I mean, it's like you said, Bob, if you don't have a completed project, you don't really have collateral.
And now if you're not collateral, you have to throw good money maybe after bad money to get it going. I mean, it's horrible. Hey, Kyle, talk to me about environmental. How does the SOP 5010 address environmental?
Yeah, so there's not a huge amount of changes in the environmental side for this new SOP. There's some differences around NAICS codes and some different workflows there, but it ultimately hasn't changed much from what is existing today.
Do me a favor, give me an environmental 101, assumes no one's done it. We have a piece of property. Go ahead. What are we concerned about? Give me the very top line. Why are lenders concerned about underlying environmental issues?
Yeah, well, because that is a big danger to your collateral, right? So the property that you're lending on can be affected by all the properties around your property as well. And big environmental cleanups can be a ginormous expense and risk, not only to the borrowers, but to the bank as well. So, for example, one of the hardest loans I've ever seen was in Georgia, and it was when the environmental regulations changed, and suddenly we had to do environmental due diligence. The bank had waived this in this case, and unfortunately, the borrower found that there was a submerged tank on their property in the middle of construction. And so we then had to do a change order at about $75,000 in cost.
Is that all? I mean, that's nothing. That's nothing to some of us. Yeah.
Well, yeah, to this one, it was a small dance studio. So it was probably a third of their budget for construction. The TI of an old building, suddenly there used to be a gas station, because unfortunately they didn't do the basic review of the history of the site. And so those types of things happen. And it's completely avoidable with good environmental due diligence.
Well, guys, I always like to share the quick story. My intro to environmental issues was a loan that I did on a small gas station back. Guys, this was in the 80s. You could buy a gas station for $250,000. The guy bought it. I helped package an SBA loan. It got funded. Well, guess what? The previous owner had been doing oil changes, but instead of disposing of the oil properly, he had been walking out the back door and pouring it on the ground. And there just happened to be a creek that fed into another creek that fed into a river that hit the city's water supply. The cleanup on that project was somewhere, it was in the seven figures on a property the guy bought for $250,000.
And if the lender had lent money on that and taken possession of it, the lender's writing the check, correct, Lance?
The lender did lend money on that. and the lender abandoned the property. So it's the environmental issues are very important. Making sure you do the proper environmental due diligence is critical anytime you have real estate involved with an SBA loan.
No, very good. What other type of services do you offer, Kyle?
Oh, as for SBA, the other neat part for us is, around 504, with that program, we help with the green program for that. We do a lot. There's some solar programs that we have here as well, helping, businesses become more efficient and offset their carbon footprint. So really we have a guy for that is the way I say it. If you have anything like, Bob, I think you wanted to mention a little bit about historic buildings.
Oh, I do.
Yeah, we have a person for that as well. We have architects, engineers, it's really exciting to be on a team like this where if you've got something weird or really technical, send it my way. I have somebody in my back pocket that knows all about it.
In Lance's weekly Coleman closing underwriting newsletter, this week we were writing about historic national properties. Mm-hmm. And what's fascinating about this is, Lance, you need a letter from SBA before you spend $1 in renovation or in any renovation of any type of property. And don't you dare bulldoze that property because you're going to have a lot of people coming after you on that. What do lenders need to be aware of on financing these type of properties? And more importantly, how do we know if it is even National Historic?
Well, there's a list that you can go in the SOP 5010-7 and it will tell you where to go and find the list. But
we have the link. It's National Park Service actually is the one that does it. But there's a list of all the properties. Go ahead, Lance.
Search your address and it tells you if you've got a problem or you're clear. So I encourage, it's really easy as a SBA participant lender to get lazy and say, oh, well, there's no historic property in my lending area, but you might get surprised. I live in a community. My family has two buildings that were built in the early 1900s that are both on the list. So,
and there's a lot of different lists. You have National Historic, but you also have state and community and that. Lance, do you just tell a lender, don't bother, don't even try to renovate these properties into, say, a nice area?
I think there's due diligence and process. And I think the important thing is checking your property. Now, guys, if you've got a blank piece of land that you're going to construct something on, there's nothing historic about that. But, Kyle and I are both in the South. There are plenty of historic properties in the South and some that you might not even be aware of. So one of the most important things is just making sure to check.
Lance, I'm going to give you a question. I don't know the answer, and I don't think you do either, but I'm going to ask it anyway. In SBA screen out their 1923 checklist eligibility, does SBA check for this for the lender? They don't.
No. Okay. No. But it's critical to check, and it doesn't mean it's a dead project. It just means there's process, and you may have to get together with Kyle's company to work through that.
Yes, Kyle, how much is that? Let's say the renovation is $10,000 on a normal project. If we have a National Historic property, how much is that going to increase the budget generally?
Well, unfortunately, I don't have a historic crystal ball on this, but it does depend. So there, in the properties that have been,
I'll take that.
In the historical properties that I've worked on, there's certain things that you have to do specific to preserving that property's kind of the uniqueness of it, right? So you can't just throw aluminum siding on it or something to that effect. You've really got to put some thought through it, and make it a nice property. So yeah, in some cases it's going to cost more. I know one of the examples I can give you was one in San Francisco where we put an elevator into the property. The interesting thing about that one, as we were talking about construction risk mitigation, one of my engineers at that time found that they forgot to include the elevator in the budget of the elevator renovation for the historic building. And so those things happen. So, nobody's perfect. Everybody makes mistakes. But yes, with historic properties as well as construction, you really got to take your time and and make sure everything's lined up just right.
My answer to my own question is absolutely I would do this, but only with the SBA guarantee loans.
Yes. Yeah, good program for it.
What else does partner do? I mean, that's a pretty extensive list of services for the borrower and the lender. Anything else? Do you do cleanup? Will you actually go in and remove the tank and remediate the property?
We do. Yeah, we actually do help with remediations. So, in that situation where you find that submerged tank, we can step in, find out all the steps to get that fixed and get the borrower back on track. So that is one of the aspects of partner that's pretty neat. We can identify the issues and then also address them as you need us to.
Very good. Great. Well, Kyle, I really appreciate you coming on. Tell us real quick what's happening on the, go back one, Michael, real quick. The 11th, this is a free webinar for Coleman audience. Just give me a quick recap and how do you register?
Yeah. So there were some big changes in policy towards construction in this new SOP. In fact, like Lance had said, some of us, would argue that some things that were very critical were removed. Whether that was intentional or unintentional, remains to be seen. But we feel in the previous versions of the SOP, the SBA had it right. There was decades of precedent of good construction lending, policies that lenders could still follow. And so we want to talk through those changes, talk through best practices, and make sure that lenders are following the best practices they can, given the new SOP and the requirements that need to happen. So specifically, around waivers that used to be blanket waivers, there's a new process for that. And then also making sure you document your file, not only on the front of the project, but also on the back of the project in case something happens to protect your guarantee in the long run. And so that's the exciting part about working in construction is, these are typically new buildings, new projects, new businesses, new jobs. And the neat part is it's just not numbers on a page. It's a new building, it's a new business, and we get to work on it.
Awesome.
Well, the neat thing too, guys, is SBA had it all queued up with technical corrections that we're going to reinstate the construction provisions that were in the 50-10-6, and then it just disappeared.
Yeah.
What I said earlier and what you reemphasized, Kyle, if you're doing an SBA construction loan, pull out your 50-10-6. I got one right here, but pull out your 50-10-6 and and just follow the construction provisions. And then Kyle's webinar is going to help update you on other things related.
Yeah. Personally, I have no issue with the wording in the 50-10-7. It goes back to the do what you do rule. Do prudent lending and do what you do in your non-SBA loans. If you require construction management on a non-SBA loan, you're going to need it on an SBA loan. Just be prudent on that.
Yeah, and Bob, you're right on point. There's not a bank that I've worked for that didn't require construction monitoring. Now, one of the larger banks that I worked for had construction monitoring in-house.
Sure.
But every bank that I've worked for required it on a construction project, except for really.
We're going to end the webinar on this note. You're a former bank. You've worked for the FDIC or the OCC or whoever it was on bank failures. Bad construction financing has contributed to a number of bank failures, correct? That's probably the number one reason. Yeah.
Absolutely. Even in the Great Recession, Bob, a friend of mine who's a venture capitalist in New York, and I worked on a project where he bought an entire subdivision of partially finished homes.
Ooh.
And the loans were fully funded. Obviously, he got it at a significant discount and made some money off of it. But the long and short of it, construction loans is critical to get the project finished as proposed. And if you don't have adequate construction monitoring in your bank, get a third party like RSI.
Yep. Thank you very much for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Cool. Have a great day.
Yeah. Thanks, guys.